What's up, everybody? This is Kelly Cook coming live to you here in Phoenix, Arizona with the Everything Phoenix show. We are talking and we're going to dive right in. But what is going on with the current housing market? Is it going up or is it going down? We're tracking this on a weekly basis. We're going to jump all over that. You can probably see there's a negative 24% number in here somewhere. We're going to discuss what exactly that is. There also are some development issues going on and some things happening on a national basis as well as a local basis here in Phoenix that definitely are noteworthy. And what's going on with mortgages? What are mortgage applications? Are they up? Are they down? What is going on with them? Well, I'm glad you asked. If you want to stay up to date on specifically what's happening in the marketplace here in Phoenix, Arizona, this is the show for you. So let's dive right in, okay? We're going to just get right to it and rock and roll. So you can see right now the market index here for the Crawford report is 141. Now, we all know that we follow the Crawford report here. If you follow the show at all, you know exactly what that is. It is the authority on the local housing market data. And what is a balanced market? What is a seller's market? And what is a buyer's market? Well, if it's between 90 and 110 on the CMI, the Crawford Market Index, it is a balanced market. So where does everything stand today? Well, you can see right now, with a graph on my screen, you're looking at a market index of 141 for the entire area of the greater Phoenix area. So that is still overall pretty good. But what's going on and what's going to happen for the rest of this year? Well, I'm glad you asked. This is a show you are wanting to see. So here we go. We're going to dive right into some commentary from the Crawford report. Now you see the affidavit of values up here that were just recorded. They just came out. That's interesting. So you have 5,896 closed transactions, down 18% from 7174 last year at this time, but it was decreasing last year at this time too, and continue to do so. Hopefully that's not the trend this year because the consumer is now used to these higher rates. And according to the CPI report, inflation is down from where it was last year this time. So if that's the case, hopefully there'll be more buying going on because the shock is not there. The uncomfortableness, well, that's probably still there, but the dollar is going a little bit further now, hopefully, because inflation supposedly is down than it was this time of last year. So closed new homes up 1.6. So there's new construction going up and from where it was last year. There were 4,200 closed resale transactions, down 23 as of today. And then overall median sales price in September was 450, down 2.8% from September 2022 last year, and down 2% from August last year. So 450s are new median sales price. Okay. Resale price was down to 440. That's down 1.1% from September of 22. And new home median sales price is 479, guys. So you have a new home median price of 479, but you have a resale overall median sales price of 450. Interesting, right? So right now we're going to go into these two charts. Let me go to this one first, okay? Now, October 1st, this came out. And as of yesterday, or as of this morning, the October 5th commentary we just read, the affidavit of values had not come out. So that is interesting. But what do these charts say, guys? This chart here says the dollar volume of closed transactions is shown in the chart below. Okay. There it is. Now, that's not great. If you look at this right here, look at 22 to 23. Oh boy. It is down from now. What is this again? Year-to-date dollar volume. So this is everything happening in the marketplace. This is everything happening in the marketplace. Transactions that are being sold and homes being bought too as well, right? So you went from 28 million in 2022 to 21 million in 2023. That's a big drop off. But look at 2021 at 19. Look at 2019. I'm sorry, 2020, 19. Look at 2019 at 18 million. So we're still well above, but it's a big drop off from the last 2 years. But guys, the last 2 years was not normal, not at all. So this is for Maricopa and Pinal counties. And we've filtered out all transactions except normal resales. That's just the resale market decreasing 24%. The drop between 2022 and 2023 is 24%. If you are earning as a real estate professional 24% less than last year, then you are in line with what the market has done as a whole. Even though sales volume is down massively, the increase in prices since 2020 means there's still more business this year than there was in 2020, oddly enough. So you have this big drop, guys, in transaction count, but yet, because price points have continued to go up, there's still more business out there to be had. Interesting. Also, too, I just saw a friend of mine and client actually who was in an investment seminar up in Idaho, Coeur d'Alene, just today sent me a screenshot, and it said currently, if I go get it for you guys, it said currently that right now there are more realtors across the country, okay, than there are homes for sale. The number specifically is there are 1.04 million homes for sale nationwide, down 26% year to year. Okay. And this is at the end of January. So this data is a little old here, but nonetheless, the picture is still the same. Similarly, in January, the NAR, National Association of Realtors, had 1.45 million members. So a million homes approximately, about a million for realtors. Now, since then, there have been actually more people exiting the business, which is good, I think, overall for the industry. At the end of the day, what people who are doing their best, they are working full time. They are trying to make a career in real estate. What they would love nothing more is then to have higher standards across industry lines, so that the people who are really giving it their best and making this a full time career have just those other people to work with, to deal with, to consult with, to bounce ideas off with, and not to get in the way when you're doing a cross sell transaction. Guys, I can tell you right now that a majority of deals that maybe go sideways when we're working with a buyer or seller typically are because the other agent on the other side is a agent who doesn't do much business, and therefore sometimes doesn't know how to articulate the situation to their client best to try to come to a win-win solution for all parties involved. And so in the situation where you have a hard market, typically you always see this all the time. Typically, more agents will get out of the business, and then when the market's good, more agents get into the business. That's just kind of how it works, for better or for worse. But we do love the fact that any type of higher standards, we welcome that, because that will keep the people who are really trying to go at this and make a career out of this. They'll still adhere to those standards, whereas the people who are just kind of for all the other reasons besides that may just drop off. And I don't think that'd be bad necessarily for the industry overall. But we'll see what happens. We'll see what happens. All I can tell you right now is there's the people who aren't in it for the long haul. They are having a hard time, and so maybe they are going to get out because there are more agents than there are homes for sale. Speaking of which, nationally, we said this before. I'll say it again. Right now, the projection for the national number for homes sold in 2023 is looking like it's going to be 4.3 million homes sold, transacted in 2023. Compare that to last year, 5.1 million homes. So we're down 24% on volume in Maricopa County. Now, I don't have that number in front of me, but the math computes, I think, in my head, around 18 to 20% down nationally if those numbers play out to be true by the end of this year. 4.3 million homes sold compared to 5.1 last year. So it's along the same lines when it comes to Phoenix. That being said, what are your thoughts on that? Do you think that's good, bad for the industry? Comment below. Let us know. Chime in if you're listening. I can see a bunch of people are watching here, but comment and below if you don't mind. If you don't want to be shy, and let us know what your thoughts are about that and where you're listening from. We always love to hear where someone is tuning in from, if you don't mind. Okay, look at this screen share. Ooh, I like that. A little bit different. Okay. Now, what if I go over here? What are rentals doing? Because at the end of the day, actually, you know what? Before I tease you with that one, let me go back up to this graph here, and I'll make it a little bit bigger. Okay, because it'll be easier to see. But look at this graph right here. Now, this graph is new construction. Look at that. Almost the opposite of what resale is doing from 2020 through 2023. Look at that. Up, 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 and away. Year-to-date dollar volume for new construction. The chart we showed on October 1st, which was the resale one I just showed you, is somewhat depressing for agents working in the resale housing market. However, below, we have a much more cheerful version. Okay. And if we read below, the key difference is that for this one, we only included new home closings, okay, new construction. The dollar volume for these new homes is not only higher than every other prior year, it is up massive a massive 11.5% from last year. Clearly, agents working for developers are not feeling the same challenges the rest of the agent community is going through. Business is strong, demand remains good, and there's no reluctance to sell due to cheaper mortgages because there are no cheap prior mortgages on newly home build homes. Guys, so what they're saying is if it's new home, there's not currently a mortgage on it with someone living in the property that has a rate of 3% or 2.5% or something crazy like that. So someone will just go buy it because of that situation, right? And so also too, what they're saying is that home builders aren't afraid, right, to actually give a discount point, some concession, some money to that buyer to purchase the property to have a lower payment on a 2-1 buy down or 3-2-1 buy down if they buy their house. They're taking some of their profits they would make, making a little bit less, and they're instead giving it back to the buyer to purchase the home. So guys, if you're wondering what that's about, and if you want more help on that, reach out to us. Let us know because I'd be happy to chat with you and be happy to represent you. Anyone on our team would be able to do so and do so in a great fashion because we'd be able to get that negotiated buy down for your mortgage to make it cheaper on that new home. It's almost a given because they want to sell properties and they know affordability is an issue, and they know that if you can have a rate buy down and have your monthly mortgage payment be less in year 1 and 2 and possibly even year 3, that they will get the house sold most likely. So we'd be happy to negotiate that on your behalf when purchasing a new build. Reach out to us at 480-660-5974. We'd be happy to walk you through that process of buying new home construction here in Phoenix. All right, now let's go to rental houses, rental prices. What are they doing? Where are they at? Let's go to lease price by month. Here you go. All right, guys, you can see right now that it's holding pretty steady. Look at this. Let's go right here. From June of 2022, the average rent price per square foot was $1.36. $1.36. 2022 in June. Now we are past that year over date. We are in September of 23, and our rent price is what? $1.38. It's up 2 cents. That's it. It has remained relatively flat. Now it went down a little bit here, right? You can see that, but it's remained relatively flat. So it has kind of followed what the sales market has done in the resale market. Look at this. That's what the prices have done. They've gone up in the resale market, and so have rental rates as well. And then they flattened out here recently because so have home prices and home demand when people are buying. So you can see that it's following the same trajectory. Now, what are your options as a home buyer or maybe a home renter, right? Either way, you have to live somewhere. What are your options? You rent or you buy. Well, right now it's holding steady on the resale market. It's holding steady on the rental market. So what do? Well, right now we made a comparison on this, guys. Where we talked about this. We made a comparison that for the median average sales price home at 450, that's going to get you about a home around 1,800, 1,900 square feet in the greater Phoenix area for that median sales price of $450,000. Well, if you take the average cost of that, if you're only putting 10% down, and you throw in your property taxes and your insurance and your mortgage insurance, if you're only putting 10% down, and you take all those factors into consideration, your payment's going to be probably in the ballpark somewhere of around $3,100 to $3,200 a month, right in that ballpark. Conversely, if you rent, you're looking at that rental property at $1.35 a foot right now, being $1.38 a foot, right in there, being around that same size home, about $2,500 a month, right about that number, give or take. So right now, you're looking at about a $600 to $700 delta difference between owning and renting. So you could easily say, well, that's the case, Kelly. I'm going to go ahead and rent. I'm going to save some money. And you could. You most likely could. Now, obviously, that's a general statement. It depends on what city, what suburb, what zip code, what neighborhood you are going to rent or buy in. That could change a little bit. But if that's the number, that's the number. But what are you going to do a year from now? A year from now, what are you going to do? What if inflation continues to stay a little bit higher? What is your best hedge against inflation, guys? When it comes to housing, the best hedge against inflation is a fixed cost on your monthly payment. And last time I checked, if you sign a year lease in a year, that could change. Now, it could go down, right? But you may have to move for it to go down. The landlord probably won't renegotiate. They'll probably, if anything, want to try to raise it. Whether they get it or not, it's a whole other conversation. But you can fix your cost if you have a 15-year, a 20-year, a 30-year fixed mortgage. So you know that no matter what inflation does, housing prices go up, interest rates go up or down, whatever, you are fixed at that number. And if you're fixed at that number and rates go down and you like your house, guess what you can always do? Refinance, assuming you have equity, assuming you put some money down, assuming the market doesn't tank, right? All that stuff, which as of right now, at least in Phoenix, they're showing no signs that that's going to happen anytime soon. All right, so now I'm going to share my screen again, and we're going to talk about, let's talk about some development. Okay, let's pivot from the housing market, and we'll go into development here, guys. But before I do that, I got some cool stuff here. You can see the headline. But let me just go back over to rates. I want to talk about this because we're just talking about rates. 7.69. It is actually down a little bit from the high, which is 7.72. Okay, just a week ago or so. But 7.69 is a 30-year fixed. 7.01, 15-year fixed. The jumbo is at 7.74. The 5/1 arms are at 7.06. Guys, why are 5/1 arms less than a 30-year fixed? Well, because they want to have it potentially go up for you if you cannot refinance in 5 years. You'll pay more, most likely, if you cannot refinance. Now, what's the chances rates will be down a little bit from this number of 7.01 in 5 years? Highly likely it will be, right? But again, people who are extremely risk averse don't even want to take that chance. And I don't blame you, right? That's your own prerogative. But the reality is that if you look at the cycle of rates and what the economic news is doing, the economy is going to possibly stall out, and therefore rates will have to come down. Matter of fact, if you look at this headline right now, here's a headline right here from NBC. We're leaning more towards a mild recession instead of a soft landing, JP Morgan's Michael Feroli reports. So that's a headline. I get it. But the article talks about that and as to why. But right now, the soft landing the Fed wants is probably not going to occur, guys. Why? Forget what this JP Morgan guy, I'm sure, is just a little bit educated, a little bit smart here, but no one knows for sure. But I think he's probably right, because you look back at the Fed's history, they've hardly ever got it right. They've hardly ever had the soft landing, whether it's going up, going down, whatever. So that being said, it probably won't be so soft, and you're probably going to have some sort of mild recession. Matter of fact, the Fed wants to see that, but then will they overcorrect to potentially not have a soft landing and therefore yo-yo this thing? We'll see. I don't know, but it's a real thing that could happen. Here's another thing that's happening in the news, okay, from CNBC. Mortgage demand drops to the lowest level since 1996 as interest rates head toward 8%. Now, a lot of people have been saying that interest rates will probably be up around 9% by the end of this year, and I think they're probably right. Here's Abby. Hey, Abby, what's going on? Holy moly, 7.69%. Yes. Yeah. Yes, it's high, but it was a little bit higher. That's good news, right? It's come down like a smidge, but probably won't come down much here anytime real soon. But here's some key points. The average contract interest rate for 30-year fixed mortgage with conforming loan balances, which is Fannie Mae, Freddie Mac, which is $726,200 or less, increased to 7.53%, and that's just even lower. That's yesterday. So right now we're 7.69. Applications to refinance a home loan dropped 7% for the week, and were 11% lower than the same week 1 year ago. So refinances are down too. Applications for a mortgage to purchase a home fell 6% for the week and were 22% lower than the same week 1 year ago. All right, so it gives a picture there of a house for sale, and it talks about all these things. But the reality is right here is the purchase market slowed to the lowest level of activity since 1995 on the purchase mortgage side specifically, as the rapid rise in interest rates push an increased number of potential home buyers out of the market, said Ken, who also noted that the ARM mortgages, they also increase. Why? Because the rates are lower. We just saw that, right? The rates are lower. Look at right here, 7.69 compared to 0.06. So guys, that could make a lot of difference on your monthly payment based on your size of your loan, right? So that's why ARMs are increased, and then people are betting on the fact that in 5 years they'll be able to refinance. As a matter of fact, they aren't showing the 3/1 ARM, but I guarantee that rate is probably even lower than the 5/1 ARM. So you're taking a little bit more of a gamble. But again, if you think rates are going to come down in 3 years or less because of what the economy is going to be doing, i.e., slowing down, what is the Fed's remedy. The Fed's remedy is to say, oh, okay, well, I guess we have to lower rates now instead of increase rates. And therefore, it spurs economic activity. Okay. Now, that's all good stuff. Or is it really? I'm sorry if that was bearer bad news. I'm just keeping you informed, guys. We will not sugarcoat this. But I do think that in 2024, we're going to have some runway here where some things could get interesting because I think that they're going to have to the lower rates, right? They're going to have to at some point to not make this thing go into um, a full-blown recession. And what sitting president that may want to run again for office, and that's going to happen next year, wants to try to get reelected in the middle of a recession. So that's just common sense. So that would tell you probably rates are going to come down as well to a degree next year. That all being said, if you are going to buy a house and you get that 2-1 buy down, that 3-2-1 buy down, or you get an ARM, you're betting on the fact that that's probably going to happen, and it probably will. In the meantime, until that happens, you have a lower monthly mortgage payment. And that's how you kind of skirt and play the system here if you're looking to buy a house or possibly refinance. Okay. All right, let's go to some development. I'm going to share my screen again here, guys. And let's talk about the Phoenix Suns, our beloved local Phoenix Suns team. They, along with the Mercury, the WNBA team, are going to have a new facility being built. And this looks amazing. 138, I think, 1,000 square feet. I'm sorry, 123,000 square feet, just off by a little bit, but that's a large facility just to the south of where the footprint center is, where they currently play their games in downtown Phoenix. So, guys, here's a rendering, but it's going to be obviously really, really state of the art, really cool. And they're going to have offices there too as well. They're investing in the Phoenix infrastructure for the Phoenix Suns headquarters. I mean, look at this. This is just absolutely outstanding. Look at this. I mean, it's beautiful, guys. It's going to be state of the art. It's going to be really, really big, and it's going to be a great place for Phoenix Suns to put their flag and plant their flag in downtown Phoenix to bring more jobs there. And they said this more than just a company investing in the infrastructure. Excuse me. That Phoenix Suns, being a NBA team and with the spotlight being on them at such a high level, is a change agent. It has the ability to be a change agent, and they want to really, really really invest in the Phoenix area. So good for them. And the owner is throwing a bunch of money at it. So awesome. About $100 million it said, I believe. And so, yep, downtown Phoenix office campus. So I'm excited for it. And we'll see how that plays out in the next several years. Okay. We've been talking about this a lot. Glendale's VAI Resort. Okay. This is going to be huge. You see some renderings of what it's going to look like on the interior, but this is going to be outstanding, guys. This is right next to the Mattel Barbie Barbie and then all their other lines too, but Mattel, the toy brand, they're doing their own amusement park right next to this as well. But this resort is going to be state of the art. Look at these photos, guys. It is just absolutely outstanding. A mix of elegance, innovation, and a rock and roll attitude are what inspired the VAI interior resort. So, wow, there's a room you're going to see, and it's just really, really cool to see that happening. And it's almost done. Well, almost, kind of relatively speaking, but it's coming. Okay. Now, to more of a national note, millions of homes are vacant in large cities across America. What a crazy, crazy headline that would be. What does that mean? Well, before we go any further, Lori, what's going on? Go Suns. Love Booker. I do too. I'm glad Booker stayed as part of the whole Kevin Durant thing, right? That'd been awful if they traded him. So Booker's there, Kevin Durant's there still, and all the other usual suspects that should make us a deep playoff team, hopefully this year coming up. But we'll see. Other teams are making moves as well. Like the Bucks just traded for Damian Lillard. That was a big pickup for them. So we'll see what happens. But I have confidence in our Phoenix Suns. All right, back to this. Millions of homes are vacant across America. What does that mean? Well, let's look at the breakdown. 5.5 million are vacant. Why? This is a pretty cool graphic here, I think. You have New Orleans leading the charge with 16% vacancy rate, and you have Miami at 14%. But why? It breaks down all this. You can see Miami, 53%. I can't highlight this here, but I can. Is because it's recreational purposes, seasonal purposes, right? That makes sense in Miami. Duh. For New Orleans, not so much. More so for different reasons, because of her rent, and they're not able to be filled. Okay. Where does Phoenix land in this? We're way up here. Okay. 9.1% total vacant homes right here. But a big one, again, 41% are because of seasonal use and recreational use, maybe Airbnbs, et cetera, maybe, right? Occasional use. So that's not that big of a deal. Our overall vacancy rate for sale is 6.1%, which is nothing. 6.1%, which is low for a large city. Okay. But it is increasing. Now, a lot of this has to do with, I guarantee a lot has to do with the fact that you have a lot of iBuyers, not just Open Door, OfferPad, but you also have Progress Residential, American Invitational Homes, these big private equity REITs, if you will, or funds that have bought up a lot of homes that are renting them out as well. And sometimes have them set vacant if they are just not in the process of renting them out because they have so much money tied up into these homes. Okay. Corporate homeowners, that skews this result a little bit. But really, at the end of the day, what that's saying is that what does it mean for the housing market? That they said that adding supply to the housing market should theoretically bring home prices down, but to potentially unlock the housing units sitting vacant right now would require policy considerations specific to each city where those units are located. Why? Because a lot of homeowners have interest rates at 3%, 4% primarily or lower. We talked about this, guys. Right now in America, 79% of all homeowners either own their house free and clear or have a rate at 4% or less. So are they going to be selling their house anytime soon? Probably not, unless rates come down by a decent amount. That's the crux here, guys. Okay, and we'll end on this, and our time will be up here, guys. But check this out: City Council in Phoenix approves drawing another major sporting event to the Valley. This would be awesome, guys. So this is Formula E for electric cars. I didn't even know they had race cars like this that run off electricity. What in the world? So battery operated, like this is crazy, right? But I guess it'd be really cool. So the Formula E is a high-speed racing championship for electric cars. It has been around since 2014, and the latest version of the cars, which is similar to Formula One race cars, can go up to 200 miles per hour on a battery. Pretty crazy, right? So they approved $295,000 to basically research the economic impact and to court the racing circuit to come to Phoenix. It's a lot of taxpayer money to hopefully get this to come. So I hope it actually works. I hope it comes because this would obviously be a huge spectator event, and this would drive a lot of dollars to the local economy here in Phoenix. So hopefully it works, guys. But right now, Portland is the only nation's Formula E racing city, and apparently it's done well through Portland. So what would it look like coming to Phoenix? I guess we'll have to wait to find out. But they are heavily looking into this and trying to court a major event. Right now, guys, Formula One, it's like the who's who. I had no idea Formula One was such a wealthy sport. Is coming to Vegas, Las Vegas, actually, in I think 1 week or 2 weeks. And across the board, hotel prices have like doubled or maybe even tripled because the amount of people that follow Formula One and the amount of money behind Formula One. So I guarantee you, though, a lot of money will be coming to Formula E if we can get that circuit to come to Phoenix, which would be awesome. So that'd be great for the local economy. Michael, what's going on? We just got 3 contract with NASCAR. Okay, in Chicago. I think it would show out well in Phoenix. Yeah, I totally agree. So that's awesome because I know you're in Chicago, Michael, and NASCAR does phenomenal things, right? We have the PIR, the Phoenix International Raceway, actually in Phoenix for NASCAR that comes once a year. The problem with it, Michael, is it comes in like November. And like, I'm a big football guy, so I'm like heavy in the football at that point. And like, basketball has just started up. And so trying to break away for a weekend to go to NASCAR just doesn't fit well for my schedule that time of year. So I wish it was like in like April or March or May or something, but it's not. It is what it is. But it's a big event and it does really well. So having Formula E come to Phoenix on that, street racing style racing throughout the cities and tight turns with, big office buildings or whatever around, that'd be really, really cool. So hopefully it makes it. So we'll see. Stay tuned, guys. They're going to spend about $300,000 of taxpayer money to I guess, research it and court them. So hopefully that doesn't go wasted and they actually sign an agreement to come to Phoenix. We'll keep you posted here on Everything Phoenix. So thank you for commenting on that, Michael, and let us know that NASCAR is now coming to Chicago, the great city of Chicago in America. So, guys, thank you very much. Our time is up here, but if you enjoyed it, give us a thumbs up and ring the notification bell if you don't mind. Subscribe to our channel. And if I could talk today, I would do it a little more succinctly. I'm just kidding. But subscribe to our channel. I appreciate each and one of you for watching. Comment below, let us know what you think and how we can make this better. We will always bring you the most up-to-date information on our lives here every Thursday. So thank you guys. And until next time, Phoenix and everyone else across the country, go ahead and keep it classy. Talk to you soon, guys. Thanks.